Welcome to Business First Africa with Ashwin Bedi, where we always put business first. On today's episode, we are zoned in solely on Namibia, and particularly the Namibia Budget Discussion 2026, which happened after the tabling of the budget by Honorable Minister Erika Shafuda. Now, I was a part of this panel discussion, which included Vusi Tembekwayo, global entrepreneur and leadership strategist, of course, the Minister of Finance, Erika Shafuda, as well as Helena Mboti, a group economist from Standard Bank, and Mr. Grant from KPMG. And the conversation was varied, but ultimately it zoned in on Namibians, entrepreneurship, investments, and exactly what it means to be tabling this particular budget at this time. Enjoy. I shall begin with you. We were having a bit of a joke with Mr. Frank Steffen of Network Media Hub, and I kept saying that we need to start at the beginning, and I wasn't quite sure what I was saying, but you have been the beginning, and we would love to start with you because the beginning was that budget speech that you tabled, and we certainly hope that we can get a lot of clarity from this conversation. Thank you for joining us, Honorable Minister. Now, your budget is titled People, Productivity, and Prudence this year. And it's safe to say the critics have had their say. What are the key pieces of critique that you may like to address, and what would be your response?
No, thank you. Thank you, moderator. I know that you will pose all the questions to me, but it's okay. Yes, no, thank you so much. That question is very, very important. Just to say that, like I have said, after the presentation of my budget, I have also invited for the public to comment on the budget because that is how the budget gets shaped moving forward. Main critical issues that were raised by the public, one is that the development budget, the allocation to the development budget was seen to be on the lower side because in the projections, 8 billion was allocated for the development budget. However, when we looked at the execution rate, the strength of the offices, ministries, and agencies to implement the budget, we have realized that the absorption capacity was on the lower side. So it was not good for us just to keep on allocating a lot of money when we have realized that the capacity to absorb it is not that evident. So we have reduced it to 6.5 billion. But what is also important is to know that that is what is coming from the State Revenue Fund. There are also other contributions from the state-owned enterprise, for example, that complement the government's efforts in as far as the development budget is concerned, plus the loans that are also channeled outside the State Revenue Fund. So when you look at it and look at the sum, it's not really 6.5 billion. It's around 14 billion. So that's a significant number. That's one of the concerns that the public had raised. The second one, there was $100 that was earmarked to add to the pension for the elderly. But what people do not know is that in totality, we have 226,000 elderly in this country. And we pay 1,600 Namibian dollars. Plus the funeral benefits, that gives me almost 7 billion Namibian dollars. Now, when I have added $100, that was already like 500 million. So, add to that, it's almost 8 billion. But people, because we do not like to add the sums, they think, oh, this is just a drop in the ocean. But we say, be thankful for whatever you are given because it makes a difference. I thank you.
Thank you very much.
Yes, it's related to the first question. And yes, like I have said, it's really a human capital budget. Let me put it there. It's very social. When you have a nation that has got a vision, and that vision is to say Namibia should be an industrialized country, and the critical component of that path is your human capital. This country should be developed by its human capital. it then means you have to invest in that human capital. So the allocation to education, for example, is quite high. In fact, it's the highest allocation that we have in the budget because we acknowledge and we appreciate that we have to invest in education. But you also need to have a healthy nation. So again, investment in the health sector is quite significant. Be it now from the operational side or the combination of operational and the infrastructure and equipment that will be required to then operationalize those activities. So yes, the operational budget is on the high side, but when people analyze the budget and the operational budget, they really just focus on the personnel expenditure. But there are also other associated activities that the human being needs to be able to operate. So yes, it's quite high, like I have already said, compared to what we have allocated to the development budget. The development budget is on the lower side, but with the support from the SOEs, I believe there's a bit of a balance.
Yes, indeed. Yes, indeed. And you spoke about the importance of health. If we are powering the future, we might as well make sure we're there for it. Yes. SMEs are the backbone of most emerging economies, but often they lack access to scalable capital. From your experience across Africa, across Asia, what role does the fiscal budget have in unlocking SME financing at scale in the domestic economy?
Sure. There is nowhere in recorded history of any of the modern economies in the world where somebody else's nation states invests in catalyzing SMEs for another nation. Said differently, no one is coming to build the SME ecosystem in Namibia. Nobody. No one's coming. There is no international capital. And one of the things that's happened with the pivot in the West, in particular with the most recent administrations that have come in, is that Western nations are saying, actually, we want our money. We're constantly in capital markets. I've never seen it this difficult to raise money in the US. I've never seen it this difficult to raise money in Europe. Because the Europeans and the Americans are saying, do you know what? We think we'll do this ourselves. And we're actually going to start here. You saw it first with the retraction of capital that was going into the aid environment. It's cascaded now into capital that's going to productive sectors, in particular venture capital, private equity, etc. So my answer is a question. My answer is the question. Here's the question. Presuppose there's no international capital. Presuppose international capital doesn't exist. But you want to build a vibrant SME ecosystem in Namibia. Of your own resources, how would you do it? Do that. That's where we've got to get to. So we've got to get to, is there a regulatory framework and an environment that catalyzes capital? The reality is that the birthplace of venture capital was created because what the Americans did was they created a special tax dispensation, I'm talking to you now here, sir, that said that if you allocate money into small or developing businesses, the capital gains that investment would generate is zero rated. And so wealthy capital, instead of sitting in real estate assets or investing in bonds, was redirected into investing into small businesses. Capital is a funny thing, but of all the things we know about capital to be true, it's this. Capital is supremely monogamous with return. Capital will never cheat on return. And so if you want to attract capital, you've got to build a return model that attracts that capital, risk adjusted. So, presuppose there's no international capital. What's to stop the nation state from saying, if you're investing in companies that are turning between 200,000 or and $1 million rand a year, or companies that are generating that in EBITDA or net profits, the capital gains that you would generate from that investment will zero rate. In any event, it's going to be a penal amount. It's a tiny amount of money. But what you would find is suddenly capital flows into that ecosystem. And so often what we do in Africa is we say, government must invest. Well, actually, government must create the environment for which the investment takes place. Investors want to invest. Capital wants to be deployed. And so if you create the environment, capital will deploy. And then what happens is this, and the literature is clear. Banks don't take first risk. So when we're screaming at banks saying, why aren't you investing? Banks don't take first risk. They don't, which means we've got to find a way in our cap table on a mezzanine basis to ensure that we have allocators of capital who take first risk. Typically, these are wealthy individuals, family offices. You follow that on with some quasi-institutional capital, private equity, venture capital, etc. Then the commercial capital in the banks come in. And all the state has to do is to create the environment, and I assure you, if you create the environment and you have a puddle of water, the fish will swim.
Lovely. I would just like to say I appreciate an audience that knows instinctively when to applaud. Let's just keep that going. Lovely. I also really appreciate your experience because it's almost like a web of information, and your web seems to have caught some of my questions ahead of time. But there is one which I still think you can be able to speak on. We've spoken of what we could do domestically, but how can Namibian SMEs position themselves to global standards?
Great question. Hot off the press, this isn't yet public news, but I'll share it here. We've just secured a contract where we're working with Trinidad and Tobago and one of the developmental banks in the Caribbean to help exactly with this question. So how do you do it? Well, here's how you don't do it. What you don't do is to say to Namibian startups, go overseas and find money. That doesn't work. Because what happens is the first thing that it does is it creates a dispersion of power that doesn't favor the startup. And so they show up as a Namibian startup, and then they're at an accelerator somewhere in the world, and they're pitted up against 200 other startups from far more developed economies where the unit economics are different. So they say, well, I come from a country of 3 million people, but they're competing with an entrepreneur from Nigeria with 250 million people. So there is no way where they win that battle. What you've got to do is you've got to create a program, and in that program, you've got to have a cohort, and in that cohort, you've got to identify the fastest growing, best opportunity startups, and then you've got to expose them to international opportunities. And so the work that we're doing with this particular government and this particular development bank is finding a cohort, helping them de-risk those businesses, and then exposing them to international investors on a cohort basis, because then the power dynamics are different. It's an institution to institution, sovereign to sovereign conversation. And the power dynamics are, can you put in capital that powers the ecosystem rather than goes into the cap table of one particular startup? What tends to happen in Africa is they say, well, you know, there's money in America, go find it. But then what that does is it creates an incredibly predatory relationship. I do want to say, we have some work to do around how we educate entrepreneurs. I feel very strongly about this. Way too many entrepreneurs, particularly in our part of the world, simply don't have the right levels of information and education to make wise decisions. And so they're at, I need capital. Well, what kind of capital? Debt, equity, and how do you price it? Have you run a model for this? Can you take in some grant capital? How do we, rather than take in external, actual hard cash, is it not possible to renegotiate your payment terms and change the working capital flows of your business? There are so many things that can be done, but we're not educating entrepreneurs to ask the right questions. So they have an idea, they have a business, something that's ready for building and scaling, and then they're stuck at somebody needs to put the money in. So that's my answer to the question. First, it's got to be a programmatic approach. This everybody go and sort it out yourself doesn't work. And secondly, it's got to have outcomes that are predefined at the beginning that are going to be measured at the end.
All right. What else?
Sorry, can I just say one last thing?
Please.
Don't find South Africans for this, eh? No, I'm dead serious. With love and respect, there is the tendency here to import South Africans. You've got the people here. You've got the capacity, you've got the people, you've got the skill set. You can do some sort of program of exchanging knowledge, but you've actually got the skill set.
All right. A truly informative and insightful conversation indeed. We'll take a quick break before we return with more from the panel discussion at Namibia Budget Discussion 2026. Now, in her speech, Honorable Minister of Finance said the following: This budget is not merely a record of Namibia dollars. It is an unbreakable contract between the state and its people. It reflects both our development ambitions and the discipline required to safeguard macroeconomic stability, ensuring that today's choices protect tomorrow's opportunities. This is a call to action, perhaps rather a call to partnership between the people and the government. What are the responsibilities of the private sector to ensure we meet our goals as a country? What is required from the different ministries to ensure we meet our goals as a country? Take it away.
Thank you, Ashford, and good morning to everybody. And of course, I'd have to acknowledge, my gratitude for being on this panel today with the Honorable Minister, Vusi, and Mr. Robert. It is an absolute highlight of my career so far. As a Namibian youth, looking at the budget, I definitely appreciate the fact that it's people-centered, because Namibia is a young population, and the population has been, or the youth have been crying out for governmental support. But I always like to highlight, even to my fellow young Namibians, that as Vusi highlighted, economic theory does say that the government alone is not supposed to drive economic growth, right? Ideally, you want an economy where your private sector is a little bit more independent from your government, so that as shocks happen in either or, they don't influence each other. So some decisions that the minister has made, for example, to manage the development budget, to me, I see it as an opportunity for the private sector, right? As the minister highlighted, that decision was made due to partially capacity and execution issues within the budget. And then that speaks to the fact that as a private sector, given we have the expertise and we have a willingness and also an incentive, because of course GDP influences our business, this brings for us an opportunity to really partner with the government. So the responsibilities of the private sector, I would say, would be definitely to look at NDP 6 and align NDP 6 to our strategies, which is what we do as Standard Bank. As you heard my executive say, we believe that Namibia is our home and we drive our growth. So definitely from a strategic perspective, looking at what gaps can we are profitable enough for the private sector to actually take on, and might actually be a little bit more efficient from a private sector perspective. So for example, when you look at the creative industries and the sports and et cetera, we have seen now that private sector can mobilize infrastructure for that sector. And we also know that part of the issues in that sector is them getting capital and funding, which could be done through sponsorships and et cetera, and support through the sector to enable those people to get paid decently and et cetera, which will then create a more of incentive for them to further on their sector. But the issue, I think, in Namibia has always been policy rigidity. So to Vusi's point of the private sector, or of policies having an impact on efficiencies, when you're in a position as an entrepreneur where you have a great idea, or even as a company where you have a great idea and you were looking for one of these PPP opportunities with the government, but policies and regulations are preventing you from moving forward to that, it becomes discouraging. And I know that in the last 10 years of my career of researching the Namibian economy, we've been speaking a lot about PPPs and et cetera. And I think it also requires a different mindset from the private sector to say, yes, there might have been inefficiencies in the past, right? But what are the solutions to those inefficiencies today? And how can we get to a point where we make the partnership work? Because NDP 6, again, cannot alone be financed by the government. Even though it is a contract between the state and its people, we as the people also need to do our part in ensuring that that ambitious plan comes about. Because again, it is ambitious, but where we're sitting at the cusp of our economy, it becomes almost critical for us to do that, because we've always been a mineral-rich economy. Mining has always been at the center of our growth, but we haven't seen that fully translate into economic or unemployment and broad-based growth across the economy. So if we don't change that mindset now, the concern is that these problems will only be exacerbated with oil and gas and not necessarily solved by oil and gas. So I think changing our mindset and opening having more dialogues like this, of course, but also as a private sector, presenting the ministries with solutions would be important. And having said that, we talk a lot about the execution rate, and I think we do, sort of speak about it in the context of the budget because it's reported in the budget. But we need to realize that the budget is a plan and a strategy that is developed with the entire government, and all ministries have a responsibility to sort of execute that contract with the Ministry of Finance and ensure that the execution in their realm of control, sort of meets standards, because at the end of the day, it's not just the Minister of Finance that spends the money, it is every single government official that spends the money. So the onus should truly be on the government at large to ensure that efficiency is there, to ensure that they're changing their mindset, and to ensure that they're looping in the private sector where the private sector can be looped in.
You know, when Mr. Thembekwayo spoke, he said that we have everything we need in Namibia. Exhibit A. Since the budget speech, we have seen significant changes in the global economic climate, and I'm sure you're paying attention. How do you think this will affect the execution of the budget?
So, with the recent increase in geopolitical tensions, of course, we know that oil prices impact inflation and etc. It's a little bit too soon to tell. They're making our job as an economist very difficult right now in terms of forecasting and figuring out what's going to happen to inflation, etc. But what we do know is that inflation is likely to increase. Even though we've come, before the conflict, oil prices were nicely under $60 per barrel. They surged to 120 and then decreased again to about 80 or 90. And that volatility is really driven by a fear, right? So it's a risk premium that they're putting into the price of oil because they have a fear of the supply of oil eventually coming down, right? It's not necessarily that current supply has really changed materially. It's more of the fear of getting supply or getting oil to where it needs to be because of the constraints in the transport. And also the price of the transport because of inflation, of course, heightened risk, there are heightened costs to transport, etc. But I think what it means is that the government, like every single Namibian, is going to have to look out for higher prices, which will influence expenditure, etc. But I think it also means that in the long term, it heightens the fact that in all industries, and I think in all ways, diversity is important. And I think right now the globe is also looking at diversified sources of oil outside of the Middle East. And I think it brings an opportunity for Namibia in the long term to say, look, we cannot impact supply today, of course not, but in 20 years, if another conflict breaks out, could Namibia be in a position where we can actually be one of the global players or the players that the globe is looking at to influence oil prices? Given the size of our discovery, yes, we can be. But again, if we play our cards right and we put ourselves in that position. So right now in the short term, of course, things are just going to get more expensive for us and for the government, which will influence the expenditure. But in general, I think this to me is more, notwithstanding, of course, the headwinds that you're expected to see from, of course, Europe and Asia's economies being impacted influences our other minerals and the demand for that, which might have an impact on our exports and our trade balance, etc. But I think the opportunities that it brings for us in the long term and the fact that Namibia as an economy is still looking at increased oil exploration, increased uranium, and other things that might slightly, partially offset and mitigate the impact of a slower global economy. I do think that it positions Namibia in the long term for investors to say, okay, maybe this is a route that we should definitely be looking at in the long term.
All right. When multinationals seek to invest in Namibia, what are the tax policies considerations generally?
Sure. We've been getting a lot of it lately. But I think in general, what multinationals or any investor is looking for is transparency, knowing what they can expect. I think clarity and simplicity in terms of, as the minister had said, the rules that we set, that we don't play by their rules, but we want to play by our rules. But our rules need to be clear, and they need to be free of interpretational matters. to bring the investor here, because ultimately the investor is looking for return, as Vusi had said. And tax plays a big portion of what the final ultimate return is. So they look at the current tax regime that is in place. They look at the tax policy reforms that are being announced and introduced. I think there needs to be a speed of converting the tax reforms into actual actions by means of getting the legislation gazetted, because that's ultimately what drives the compliance. But then also to bring back to the compliance aspect, not being over-compliant, because in every business, compliance costs money. So it takes away from productivity. So I think it ties into a number of the aspects of the budget. So I think if you look at it, you need to make tax as simple as possible. And it must be easy to pay tax. It mustn't be overcomplicated. So investors would look at what the corporate tax rates are, what the incentives are that are there, especially in your oil and gas, which is highly capital intensive. So what allowances there are in terms of accelerated capital allowances, what limitations there are in terms of how those capital allowances can be used. They would look at, obviously, the VAT regime in the country in terms of what that means for capital tied up, in terms of if there's refunds due, or in compliance also with the VAT Act. And they would also look at international tax, so the aspects surrounding dividends, the taxation of dividends, the taxation of any services, so withholding taxes are a key consideration for any multinational. And then also looking at the respective policies outside of tax in terms of either on the industry-specific or country-specific. So I think that's essentially what an investor.
Well, that's been the show. Do make sure you check out the full budget discussion on NTV Africa, that is on YouTube, as well as oneup2.com. There were speeches prior to the panel discussion and lots of insightful golden nuggets with regards to Namibia's economy. But for now, DSTV 285, GoTV 25, oneup2.com, Network Media Hub, ntvafrica.my.na is precisely where you can watch Business First Africa, where we know that it's never just business, it's life. Good night.